Have you heard the terms conditional approval or initial mortgage approval or pre-qualification or pre-approval? Well, my name is Kevin Brierton, certified mortgage planning specialist here at Neal Home Loans and branch manager. I am your no excuse lender, and we want to come to you today to talk about the confusing terms, but what they really mean. Okay, so understanding these terms is really crucial as you start your journey of homeownership or refinancing your mortgage. So let's begin with, what does conditional approved mean? Well, conditionally approved is a really crucial step in your mortgage process. It means that lender has satisfied most of your loan application items, but requires additional documents to clarify or items to be clarified before granting the full approval. This stage often occurs after you've made an offer on a house and you've submitted your loan application back to the lender, and then they review everything. They review the purchase contract and the purchase, or refinance, or reviewing the loan application and documents, but it's before the final approval. Every loan typically will be conditionally approved before it's final approved. It could be something as simple as documentation such as like employment or income verification, pay stubs, tax returns, bank statements, maybe debt obligations, utility bills. This is the additional information that helps underwriters assess your financial stability and your readiness for a mortgage. So prior to the conditional approval, there's an initial mortgage approval, usually pre-qualification or review, or different levels of this, but it's based on your credit report, your income, and your assets. So however, the level of verification can vary based on this. But it's important to understand the clear distinction between pre-qualified and a conditional approval. Pre-qualification approvals are based on a verbal statement a lot of times on your income and assets and a credit check. Sometimes they'll review the documents, and it provides an estimate of what you can afford. A verified approval or a conditional approval involves verifying your income, verifying your assets, giving a clear picture of what you actually can afford based on the documents, not just on what you're telling people, telling the underwriters or telling the loan officer. This is crucial to make serious offers. We found that if we can actually conditionally approve families, will actually offer acceptance, especially in different markets that are moving really quickly, can make a really big difference. So while approvals will give you the initial approval or initial, called pre-qualification, will give you the green light to shop for houses, conditional approvals dives a little deeper into your financial details. And this stage occurs after you're making an offer on a house, and it's required to go through the documents and review them and make sure there's underwriter might ask for additional documentation. So just being clear up front and providing everything is really my tip on that. And make sure your lender is reviewing everything, because it's happened where we may be working with somebody and then they think they can get a better deal and they get wooed by somebody else, but they don't review all the documents and they can't actually do what they're advertising. And so that's not fun for anybody to not close on the house because there's something missed. So it's not just about an interest rate on this. You really want to make sure that the lender is reviewing the documents, and if there's a program out there that sounds too good to be true, might be. Sometimes some of the programs will put you through a little bit more work to get the loan, or they'll have stricter guidelines than others. But meeting the conditions may involve more detailed documentation. So conditional approval, you have conditions to clear at that point. So it mean you have things like, hey, you have a large deposit, or unusual transactions. So if you're paying something out or you're receiving money, that could be a problem on underwriting. So you might need to detail out that or document that. So it is possible, even after receiving a conditional loan approval, it's possible your loan can be declined. So reasons can include like unverifiable data or unexpected lien on a property, tax liens, other things, second mortgages, or change in income for the negative, or maybe a negative thing on your credit report shows up. Opening a new credit card or opening a new auto loan could be devastating. So that's something you want to stay far away from that. So remember, it's conditionally approved, condition that you don't do other things or nothing else pops up. So it's extremely important to keep everything consistent. Don't open new debt. Don't change your job. Just keep everything very, very consistent. Once you meet all the conditions, though, set by the lender and the underwriter, to move to the unconditional approval or final condition, this signals your loan is almost ready to close. And it's really like the green light before you secure your mortgage. So this is an important step to get to. And in our process, we'll notify you once we have a clear to close and final approval. And that's an important kind of milestone to get to. We like to, one of the things that we are known for is closing on time. And every lender should close on time. But the reason why it's important to us and the reason why it's important to our clients we serve is we want to close on time, and we work off application date forward rather than closing date backwards. A lot of lenders will work off application date or closing date backwards rather than the other way around. So that could be devastating in a mortgage process. So think about this. If you have a conditional loan approval and there's a condition that may take a few extra days to get, that may jeopardize your closing. So you want to get conditional loan approval right away as quick as possible. Then you want to get final approval as quick as possible, at least a week or two before closing, so you can get to closing table, have a smooth closing. Navigating this process can be complex, but understanding the difference of conditional approval, which means that you have everything reviewed, but you may have some conditions outstanding or items outstanding, and then a full loan approval is really important to understand the differences. If you meet your lender's conditions, so you're well on your way at that point to go into closing and get in your house. So it's important. Thank you so much for watching. I'm glad that we're able to educate you, continue to educate you, and bring you valuable content week after week and month after month. Hopefully you guys are enjoying it. Just know, please like, subscribe, and comment below. I'll jump in the comments too. And let's keep educating everybody. And really we're here to help you through your journey and really make the dream of homeownership a reality. Again, Kevin Brierton, certified mortgage planning specialist here at Neo Home Loans, branch manager, and your no excuse lender to help you through this process. Thanks so much for watching. Have an awesome day. Take care.